With the market sell-off and today's big bounce and futures moving higher right now here in the United States, what do you do with your 401k? Should you wait, hold on and ride out this period, or is this really an opportunity to make a bold move to other investments? And what are those other investments? Stephen Lieb is president of Lieb Capital Management and author of Game Over, How You Can Prosper in a Shattered Economy. And Natalie Pace is CEO of Women's Investment Network and author of You versus Wall Street. She joins us now from Tucson. Welcome to you both. And I'll start with you, Dr. Lieb. Okay, help me, because right now the 401k started to swoon again. I didn't like seeing sort of the repeat of what we saw back in 2008. And forget the 401k. I'm way more concerned about my kids' 529, which is equity heavy, certainly. What is it people should be doing right now to save their portfolio?
Liz, I think that basically you have to put a little extra in your portfolio that you probably that most people don't tell you about, and that's precious metals. I mean, we've talked about it. You guys have talked about it a lot. But the typical American, the typical certified financial planner, certified financial analyst doesn't really consider precious metals an asset class. But let me just give you one statistic. Over the past 40 years, 2 generations, gold has outperformed the S&P 500, even with dividends reinvested. It's been the best performing major asset. And today, my feeling is with all currencies, all major currencies, the euro, the dollar, even the Russian ruble, Russia's selling their ruble today weak. It's sort of a race to the bottom. Gold is going up for very good reasons. Would you buy
it here at 17 and change?
Absolutely, because I think the fundamentals behind gold right now are at least as good as when I first wrote about it in 1999, maybe even better, because there's no reserve currencies in the world. None. If you hold U.S. dollars, you're getting 0% on your money. Gold, you get 0% too, admittedly, but gold is at least accepted as something that will hold its value. The dollar continues to go down. You don't know which currency is going to go down faster.
Well, glad my dad gave me some Krugerrands when I was little. Thank God
Hold on to them.
Natalie, let's talk about your perspective here on all of this. You versus Wall Street. What a great title for a book. Why do you say that? You know, my dad also used to say, the big boys on Wall Street, because we were from California, oh, they know stuff way before we do, and you're never going to own the bottom or the top of this market. But how can the little guy win in their 401k?
Well, I think that this week is a reminder that buy and hold is a strategy that no longer works. So the average American needs to understand modern portfolio theory, and it may sound like it's a difficult thing to understand, but it's actually quite easy. You keep a percent equal to your age safe at all times. In uncertain times, or if you're a bit of a nervous Nelly, you're going to overweight safe. You need to diversify about size and style. That simply means small, medium, large, value and growth. You should add in hot industries. If you like gold, it should be a slice of your pie, not the whole pie. One thing that Dr. Lee did say is that it outperformed over the last 40 years, the S&P. But in truth, if you bought gold at the high in 1980, you had to wait 26 years to get your value back. Yeah, so it's really important not to buy high and not to invest all that you've got. One other thing that's really critical, and that is annual rebalancing, because if you are not capturing your gains, you might be losing them, as we saw yesterday.
I know. It's too bad that it's not a buy and hold market anymore. We all have to work now. We have to actually trade our portfolio here. But, Stephen, what do you say about her point about gold?
It's not a buy and hold market. And, of course, you can go back to 1929 and know that it was not until the 1950s where you got your money back. The point is today, Liz, it's a totally different kind of world. Not being buy and hold, that's a different world. Game has changed. And when the game has changed, it doesn't favor long-term assets. And that's exactly what she's saying. It favors another kind of asset. And that's going to be precious metals or other commodities.
Miners? Would you buy the miners out there?
Right.
The Freeport McMorans?
I would buy all of the above. Yes, gold is not just gold. Gold's also silver. It's precious metals. And I would also... Yes, I would also buy other commodities. In particular, I would overweight energy dramatically. I mean, there's OPEC right now needs Saudi Arabia's expense for drilling oil, for selling oil, is about $95 a barrel.
But I don't care about Saudi Arabia. I don't care about OPEC, that's for sure.
Right. I can't stand OPEC, but I can tell you that if oil goes below 95, they're going to ease up on their production.
Natalie,
and that means there's a lot of great oil bargains in this country.
Natalie, you said growth versus value, certainly. And do you pay somebody to
Yes.
do this? See, this is the point. You know, you might have legal secretaries and CEOs who are in businesses entirely different from high finance. You hire a professional to do this because otherwise it's just so much work. And we want to guide people on the right thing to do.
Yeah, you know, it's not a lot of work. You just need to know the ABCs of investing. It's kind of like you can do multiplication after you know how to add and after you know how to count. Yeah. So if you just learn how to count in investing, and it really is easy as a pie chart. So it's on page 92 of You versus Wall Street. It's not difficult. Even if you do have a wonderful certified financial advisor, if you are going up and down with the markets, then you need a new plan. It's got to be the modern portfolio theory. I do agree with Dr. Leeds that you do want to add in hot industries because I like natural resources a lot. Latin America funds doubled between 2009 and 2011.
We are going to leave it on that bit of suggestion. We thank you both very much, Dr. Stephen Lieb and Natalie Pace.